Hello, I am Taylor Gibson with Optima Office, and today we'd like to discuss with you some recent federal legislation that has been passed called the CARES Act and FFCRA, designed to provide relief to both employers and employees for COVID-19 related issues. So let's get our disclaimer out of the way. The materials contained in this presentation are offered in summary form for informational purposes only. If you have any questions that are specific details of either CARES or FFCRA, please contact us at info@optimaoffice.com. So, what's available to you in these programs? Well, under the EIDL, which is a portion of the CARES Act, you can get a disaster loan for up to $2 million at 3.75%, available directly through the SBA, or Small Business Administration, excuse me. This is probably better than the terms you can get at a bank, so you should look into this. Once completed, you can also file for an emergency grant of up to $10,000 with funds to be dispersed within 3 days. On the payroll tax front, you can now defer all 2020 calendar year payroll taxes until 12/31/21 and 12/31/22. You'll also be able to use net operating losses incurred in 2018, 19, and 2020 for up to 5 years on a carryback basis. And finally, FFCRA is a sick leave provision for employees of companies under 500, and the provisions are covered by tax credits, but paid by the employer. And now the big one, the Payroll Protection Plan, or PPP, which everyone has been talking about. Unfortunately, yesterday on April 16th, the SBA announced that the initial allocation of $349 billion for the PPP had been exhausted. It's unclear right now how much of the $349 billion has actually been sent out the door to recipients, but the SBA is not sharing disbursement figures, nor are the majority of the banks. We know of many PP applicants that are still awaiting notification from their bank to see if their loan has been approved or not. So what now under PPP? Well, you may still hear from your bank that your loan has been accepted, as there is a delay between the SBA and your bank completing all of the paperwork and then notifying their clients. There's yet another federal program, this one through the Federal Reserve, called the Main Street Lending Program, that just opened yesterday on the 16th and will support up to $600 billion in loans. These loans are more like the traditional loan and do not contain the forgiveness provision under PPP. Now, I'm sure a lot of you are aware that Congress has already been debating the possibility of another $250 billion being added to PPP. So if you don't get approved in this round, there's a possibility of a phase 2. And why do I say that? Well, let's take a look at a map of the United States. This graphic shows PPP loans as a percentage of eligible payroll that had been allocated as of 4/13/20, or the first $248 billion under PPP. You can see quite a disparity among many of the states. In fact, California ranked 49th out of 51 by this measure, only ahead of New York State and the District of Columbia. Not quite half of the states in the United States received more than twice the percentage of funds under PPP as a measure against payroll as did the state of California. So if politicians get involved, and believe me, they always do, there's a possibility that there'll be additional funds in the PPP program and a second rollout in the future. So what are the next steps that you should consider if you do have a loan under PPP? Well, we strongly recommend that you open a separate bank account to monitor and control all funds received under PPP and to track their disbursement. You should create new accounts in payroll, rent, utilities, and other expenditures by adding PPP to the name so that they can be adequately monitored and qualify for your loan forgiveness. We also recommend that you prepare a new 8-week forecast to ensure all expenditures are meeting the guidelines set forth during the covered period under PPP. And finally, you will need to create new accounts in payroll under the FFCRA, as you are not allowed to include these expenditures in your pending PPP forgiveness allocation. So we mentioned loan forgiveness under PPP. The amount that is forgiven is based on a percentage of the headcount that you retain compared to a prior period, either the first 2 months of 2020 or from 2/15/19 to 6/30/19. And in fact, the reality is the bank that you made your application through will probably determine what period they're going to look at for the forgiveness. So you should maintain contact with them. If your headcount drops more than 25%, you lose all forgiveness. This loan forgiveness applies to the 8-week period referred to as the covered period, which begins when you receive your loan and ending 6/30 of 2020, which means that any loans that are funded after May 5th may not enjoy full forgiveness. And here's the good part. Up to 25% of the loan proceeds can be spent on non-payroll items that are qualified, like rent, utilities, and other things, and still be allowed for forgiveness. So you need to ensure that those expenditures are tracked as well. So here's some general guidance on PPP. There is talk in Congress about allocating additional funds to the program, and the SBA has already indicated that any potential new loans will be on a first-come, first-served basis. So if you haven't already completed and filed your application, we urge you to do so now and get in line. Second, you should set up proper accounting to track the use of all loan proceeds to ensure that you qualify for the maximum forgiveness when you apply for that after your 8-week covered period is completed. Optima here has created a task force which will be able to help everybody from loan application, sourcing a qualified bank, determining proper expenditures, and setting up the accounting so you can apply for that. You can contact us at info@optimaoffice.com. The second, and perhaps less talked about, loan that's being offered for COVID-related disaster is the EIDL, or Economic Disaster Loan Assistance. For this loan, the maximum is $2 million and the interest rate is 3.75% and can be paid back over 30 years. It's probably better than the terms you get at a normal bank. The good news is you can use this loan for all business operations except growth. So it's not limited to just payroll, wages, benefits, and a few utility and rent related expenditures. You can also apply for an emergency grant of up to $10,000 under this provision, which would be dispersed to you within 3 days. However, it is our understanding that the funds in this bank or this pool is running low. This loan is directly with the SBA and comes with credit checks, potential guarantees, etc., that are normally associated with conventional loans. There is no forgiveness on this loan, so you will have to pay it back. Another provision that another act that the government passed to help in this crisis is called the Families First Coronavirus Response Act, or FFCRA. This provides government-paid sick leave due to COVID-19 for companies with 500 or fewer employees. If someone is sick with COVID-19 or caring for a relative, they are eligible for up to 80 hours of sick leave pay from their employer under EPLSA. The rate of pay varies depending on the reason, with a maximum of $511 a day if the employee is sick and $200 a day if caring for a relative. Another provision under this is called the Expanded Family and Medical Leave Act, or EFMLA, which provides an additional 10 weeks of coverage up to $200 a day with a $10,000 maximum. So there's a couple other key provisions which we'd like to make you aware of. And the biggest one is you can defer all of your 2020 payroll taxes during this calendar year. You pay 50% of the deferral by 12/31/21 and the remaining 50% by 12/31/2022. Excuse me. This deferral is not available for employers receiving forgiveness under PPP. Another provision is that you can receive a payroll tax credit of 50% on payroll taxes of the first $10,000 in wages of each employee if you have a sales reduction of 50% or greater compared to the prior year. And finally, 2018 through 2020 net operating losses can be carried back for up to 5 years. Now, what you should know and do now. We strongly encourage you to evaluate your current operations and create a specific plan how you and your employees can get the most from the CARES and FFCRA legislations. Stay up to date with announcements as the environment is changing rapidly and interpretations have changed on almost a daily basis. Make sure that you have informed your employees of all the benefits afforded them under FFCRA and put new accounting procedures in place, and to make sure you track all COVID-19 related funding and disbursements. Thank you for your time, and if you need any further assistance or guidance on the provisions in the CARES or FFCRA Acts, please contact us at info@optimaoffice.com.